When central banks raise interest rates to control inflation, they often face a tricky trade-off between economic growth and price stability. This documentary explores the historical parallels that highlight why this challenge persists today. In the modern economy, households and businesses closely watch every decision made by central banks like the Federal Reserve. These decisions can affect everything from the cost of mortgages to the availability of loans for small businesses. But how do these institutions navigate their complex role in maintaining economic balance? Let's look at a historical parallel: the Weimar Republic in Germany, 1921–1923. After World War I, the German government printed money to cover reparations costs, leading to hyperinflation that peaked at 29,500% per month. Workers were paid twice daily as prices doubled hourly. Savings of the middle class were wiped out overnight. The political instability this caused helped pave Hitler's path to power. But what was the non-obvious insight here? Hyperinflation didn't just affect the economy. It deeply influenced society and politics, leading to a breakdown in trust that allowed extremism to flourish. Why does this pattern repeat itself across history? At its core, it reflects a fundamental human behavior: the tendency to prioritize short-term gains over long-term stability. Governments and central banks often find themselves caught between the immediate need for economic growth and the critical importance of maintaining price stability. The trade-off is stark. Too much money can lead to inflation. Too little can stifle growth. What lesson should viewers take away from this? Understanding these patterns helps us navigate today's economic challenges with greater clarity. It's not just about numbers or policies. It's also about the human consequences of economic decisions. When central banks like the Federal Reserve make interest rate decisions, they are balancing a delicate equation that impacts millions of lives. In conclusion, while each crisis has its unique context, the underlying mechanisms remain consistent. By understanding these patterns, viewers can better anticipate and prepare for future economic challenges.